everyone, K Kim here. Today is June 9, 2017, Friday. Welcome to the market update and happy Friday. And I hope you guys had a good week trading this week. Tonight we're going to be talking about Spider, Diamond, Russell, XLF, financial sector, QQQ, SMH, IYT, and we'll call it a night. We'll look at gold and silver next week. But looking at Spider here, I'll go through these rather quickly, and I'll just do straight for minor term analysis, kind of forecasting what might be happening next week and some of the levels you should be watching. I tweeted out this week, I think a few days ago, that this is a level to watch. This has been acting as a prior resistance here, and now acting as support. People, every time when we see, it's always amazing that when there's a little bit of pullback or a little bit of a decline like this, there's always somebody coming out saying that this is a beginning of the crash, right? I mean, it's now kind of getting into the level where it's getting comical. Every time we see this kind of even like slightest pullback, even like 1 day pullback, every time there's a pullback, it's just every single time, and I don't even know why I talk about this every week, but it's just entertaining to me that it's just almost like they're waiting every single day, and it's like, yes, right now, this is it, this is the top, it's finally there, and then you see dip buyers coming in, bring it right back up, and they're like, oh, maybe not. I mean, why do you want to live your life like that? Why do you want to trade this market like that? You know, just every time we see a pullback, you call a top. You call this is a crash, beginning of a crash. Why do you want to live your life like that? You don't want to live your life like that. Market goes up and down. We're in a prime term uptrend. If market was going to crash, it was going to crash in 2015 and 2016 when we already had potentially topping pattern here. Market isn't going to just crash. Usually, if you go back and study every single crash and steep corrections, there's always, I'm talking always, except the Black Monday 1987. There's always been some kind of a 3 to 6 months topping formation, okay? Every single time. But you think that, oh, maybe Black Monday is going to happen on Monday, okay? It only happened once in stock market history. Do you really want to look for a jackpot in the market every single day and lose all your money? It's almost like just going into, it's probably worse than going to casino. At least you get probably a little bit more odds going into casino than looking for a 1987 like price set or 1987 like crash. Again, the market, we're still in an uptrend, right? If market was going to crash from here, we're probably going to form some kind of topping pattern. And you could say, well, maybe this is going to happen here. I don't know. I mean, people said in November, people said it on Brexit, people said in January, people said in March. Actually, people have been saying it since really 2012. People said it here, people said it there, people said. So I don't know why I always talk about this. Because it's always somehow I hear it on my feed or somebody retweet it or something like that, or it's comical to me that just we get what are we? We're down 0.15%. Get a grip, like, or stop trading altogether. Seriously, like, that's not the way to trade the market. You don't want to be emotional. Every blip, every pullback we see in the market is not end of the world. I don't know why traders don't learn, or that people who do get burned, they quit trading and then there's a new person come in and then say such a thing, right? So here's what I'm going to say. Spider, we're above this rising pivot, and we have a rising 20 EMA, rising 10. I did add 10 EMA here because now the market is starting to be in an uptrend. I'm going to put back in 10 EMA. 10 EMA is obviously the micro term perspective, 20 EMA more of a minor term, and then 50 EMA more intermediate term, which I talked about that as long as it stays above 20 EMA, minor term sentiment is bullish. As long as it stays above 50 EMA, intermediate term sentiment is bullish. Even though when this thing pulled back, this is exactly the level where you should start to, that's not the level to just assume that it's going to bounce, but minor intermediate term sentiment was still bullish when it pulled back to 50, man. I actually did buy that dip, which I said I was going to in my blog, and then added it more than on Spider. I'm still holding full call positions there, and this little blip doesn't doesn't freak anybody out. At least for me, it doesn't do anything. We are holding this. So let's say if we lose that level, let's just say is it end of the world? No, the market is gonna see a pullbacks, and it's gonna see up and down. So let's say if it pulls back, actually if it does pull back, it will provide a great level for to buying this dip. Let's say if it pulls back to 239.76 or so, I'll probably even buy that dip. I probably would. But looks like we're holding up here. Let's see if we can. It still looks like some kind of a bull pennant pattern though. We got some wicks here, but let's say if we see a follow through Monday, it's likely it's gonna break out of this pennant, right? Pennant. But if we lose that and continues lower, because I've seen pennants do fail, then there's a chance where we'll come back down to retest at 20 MA. If we lose that 20 MA, possibly coming down 240, 239. When the market starts to pull back, stop calling for a crash or stop freaking out. Look for opportunity. Maybe not on Spider. Maybe you don't want to buy Spider. Maybe there's a certain stock that you're watching. Market starts to pull back. Start to look for those stocks that has a that's in a primary term uptrend, has a good level to buy the dip in a prior resistance or some fit levels or something like that. So every time when the market pulls back like this, that's what I do. I always look for opportunity, either buying the dip on Spider or the indices or stocks. And something that I've been teaching to my members and writing blogs about, and I've been harping on it on these market update videos almost every week. Let's go to Dow Jones Industrial Average. Diamond, obviously, prior resistance became support. Dow Jones, actually, there's some rotation going on here. We got the small cap, Dow. Bank's doing well, but we got the Qs, and semi got hammer. Transport pretty flat. I know oil did see a positive note today. Let's look at Treasury bond. Treasury bond holding up well here, and what else do I want to look at? There's another one I want to look at. Crap. Oil. I think that's it. Oil and Treasury bond. I look at those in a little bit. So Diamond holding up there. We're above 10 EMA. 10 EMA did act as support here and here. Again, micro term, as long as it stays above 10 EMA, benefit of the Dow goes to the buyers. We did see some good buying opportunity or buying volume today. 20 EMA is rising, 50 EMA is rising. You can see 50 EMA perfectly acting as support in these two vicinities. So, Dow Jones, Spider, this is time where it is perfectly respecting these moving averages. And if it loses 10, look for 20, look for 20. Then if it loses 20, then look for 10, right? Dow Jones still in a primary term uptrend, still in a minor term uptrend, still in the intermediate term uptrend. We are in an uptrend. It's healthy. We don't have any topping pattern. We don't have any reversal pattern. Are we overbought? Are we extended? Yes, we are extended if you look at your monthly, but it was extended in 2013. It was extended in 2014. But when you look at weekly chart and daily chart, I don't see overbought sentiment yet. Let's go to small caps here, Russell 2000. Russell 2000 is a little bit more complicated look here. We're still range bound. I'm still holding all of my call positions as I've been blogging about it with my journal post. Here's what I propose. We're still range bound here. So here's the thing. Last time we hit this thing tanked. Last time we hit it here, we tanked again. There's a little bit something different here. Last time when we got up, we actually saw kind of a straight up move. And here, same thing happened in April. We got up, we had a straight up move. Well, something changed since mid-May. What we are seeing is higher lows and higher highs. What that means is we have a construction of minor term uptrend. It's healthy and it's strong when we look at a minor term uptrend. So definitely a different sentiment here. This is a solid trend, and that's a straight up move. That's also a straight up move, right? So I think we have a little bit more firmness to this straight up move here. And currently we did see some sellers coming in, hitting this rising pivot resistance here. What I want to see is on the Russell 2000 is that this thing break out, come back, retest, maybe add more, and then boom, go to 150. But let's say, going to early next week, we start to see a pullback. In the micro term, we want to see 140-ish level hold. Let's say if we start to pull back a little bit, maybe form a micro term bull flag before going higher. That's a possibility. But let's say if we lose 140.96, this thing continues lower next week. What I want to see is I want to see 139-ish. Okay, 139.9, not exactly 139, in that vicinity where the 10 EMA, 20 EMA is possibly kind of price might be one to retest that level, right? So maybe get up, retest it, and then goes higher. That's kind of what I want to see. So I want to see this thing, at least 139.80-ish holding for this minor term uptrend to have a momentum continuing to break out above the 6-month range. So those two levels I'll be watching next week should the price fall back, right? So let's see if we can actually finally break out of this level like we've seen on Citigroup. I know Citigroup, what's going on right now is Citigroup, we have right there, you see that? It's pretty similar look to Russell 2000, except we broke out, right? We broke out, you can see that right there. So there's a chance that we could come back down, retest it, but Russell 2000 has not yet broken out as of today. So that's kind of what we want to see, this thing breaking out above it. But if we should the price fall back, those are the levels to watch. We have a good construction of a minor term uptrend here. Let's see if we can keep that going here. Banks, a strong day for banks. Banks finally broke out. I've been talking about how I don't buy this. I don't buy this head and shoulder formation. I've been talking about how I think it's a bluff. And I demonstrated to you guys that how in the past, financial sector, you throw these head and shoulder formations, scare everybody out, and then it moves without them. And a lot of people are trying to short this, thinking that it's going to come about 2021. And this is a level I think a lot of people are looking at. Shorts are, forced to cover, and a lot of new buyers coming in. Here's the thing about this price action. Before you call this a bull trap, I want to tell you what really actually happened. This is what we call head and shoulder formation, right? This is left shoulder, head, right shoulder. Something that I've been talking about is how you're going to break that head and shoulder formation is with inverted head and shoulder formation. This kind of stuff happens a lot. It happens on the S&P 500 a lot in the past and major indices, and it happened on financial sector. So what it does is it formed inverted head and shoulders, right? Left shoulder, head, right shoulder. And this is a neckline. This is a confirmation of that inverted head and shoulders, meaning we have now nullified this head and shoulder formation that have cultivated, which is a bearish reversal pattern. Now we are cultivating, not only we have cultivated inverted head and shoulder, which is a bullish reversal formation, we have initial confirmation. When it's a full confirmation, there's a chance it could continue higher from this point on, but there's also a chance it pulls back and retests these neckline levels and then bounce higher. That will be a full confirmation after a retest, and then after that, I think this thing flies. Banks, probably gonna get up to about 25-30 as long as we hold some of these levels, as long as it holds above, I think the worst case scenario may come back to 23.50ish, but as long as we hold 23.98, 23.67, this thing gets up at least these highs, but I think it's gonna go much higher. I think it's gonna get to about 28, possibly even higher. Let's look at Nasdaq. I mean, are you really surprised that Nasdaq see this kind of decline today? No. I mean, this thing moved up. I mean, we've seen these kind of move before. Is it really a level to start freaking out? No. I mean, really the level you want to freak out is this level. Because that could possibly be a topping pattern. I mean, that took 6 months to what? 6 months, or what is it? Actually, that took 1 year. That's a 1 year cultivation. If anything, you want to be afraid of the Qs, this is when you should have been afraid right here. But this thing never confirmed. This is why confirmation is very, very important. This is why you cannot trade this market without technicals. It never confirmed. What is a confirmation? Going up, retesting, boom. If that happened, that would have been a great short level for this thing, for this market to crash. Well, that never happened. We cultivated new highs here, completely nullified it, and boom, right? So look at this. So now it broke out. We had another consolidation. We had a huge breakout here, and that's what's going to happen. Is just because we had this huge move, it's not going to see just straight down move. It's gonna have a shenanigan, but we're still in an uptrend. That means benefit of the Dow goes to buyers. Right on that 20 MA here, 50 MA coming off. 50 MA hasn't been tested since right here, January. So if we continue lower, maybe 50 MA to watch. This is a prior support here. We got some gaps here. So primary term is still up. We're not still in an uptrend. So actually benefit of the Dow still goes to buyers. This is not level to short unless you're, just getting, getting some scraps and, just little leftovers here. I just don't feel like this is not a level to buy. Obviously, I wouldn't buy it here. If there's some good stocks out there in this sector that is there's a potentially have a good move to the upside, then I would. But as far as a Q is concerned, for my time frame, this is not a level to buy. This is the reason why I was focusing on the Russell and the banks. I wasn't chasing Qs. Let's look at semiconductor here. Semiconductor, obviously same thing. Had a huge move here. Big bears engulfing pattern. That means it's going to go to 60? No. If you're going to be afraid of semiconductor, it would have been here. It never confirmed. How many times we talked about this? Same thing with the banks. Banks never confirmed. It never broke below these neckline. And it broke above this level. What happened when it broke above it? It nullified it. Just like what happened to XLF today. It nullified this pattern, and this thing just went nuts to the upside. And I don't know if that's what's going to happen with the banks, but sentiment is definitely there as we break above these levels and nullify these topping patterns. Semiconductor, very much bullish, and 50 MA has been acting as strong support. So if this thing does come down 50 MA, there might be some kind of a buying opportunity there for short-term traders. I am staying away from these sectors, semiconductor and Qs. I mean, if I would have went long when it broke out on these, I would, I could have ride that. But as far as going long right now here for my time frame, no. But there will be always another sector you can concentrate. There will be other stocks you can concentrate. You don't always have to chase these index or stocks at these levels. Transport is another one that hasn't moved quite a bit. We're consolidating here, right? We had a breakout, consolidating, right? Kind of trapped a lot of shorts here. Looks like there could be another run that could be made. That could go up to about 200 here, but we're above all these moving averages, and we're kind of retesting this neckline, potentially kind of a triple bottom here. Don't you love transport where it just traps everybody? I mean, it always loves to trap. I mean, trap longs here, trap shorts here, trap another short here, trap long here. It just, that's what the market does. But looking at a big picture here, we're holding up well. Kind of a consolidating pattern here. I mean, that's what it does. I mean, once this trend gets established, right, it goes up, pulls back. It goes up, some shenanigan. Get back up, pull back. Go up, some shenanigan. Goes up again, right? And then trend changes once it starts to what? Starts to develop lower highs and lower lows. But as long as it's an uptrend, it's an uptrend. This thing, are we still in an uptrend? Yes, we're still in an uptrend. Benefit of the Dow goes to buyers. I just want to talk about oil real quick. I don't know why. Make this into 20-minute video. We're still down. There's no sign of bottom yet. A little bit of pop today, but some of the levels here right there. But at this point, technical doesn't even work. I don't think it's in a downtrend. There's a little bit of support there. We got lower highs, lower lows. But this is what it's gonna do. It's gonna have this massive undercut it, get back up, undercut it to the upside, comes down. Get below it, gets up, but we're on a downtrend, so it could kind of possibly continue in that fashion. Treasury bond. I like Treasury bond here, actually holding up well. Higher lows, higher high. We do have this rising resistance. I think that's where we've been finding resistance there. But it's been holding up well despite the fact that the market has been bullish. Treasury bond is holding up well. We're just retesting that 20 MA. I think there's a gap here. I think even if this thing comes down to fill the gap, there's still a good level. And there might be some support in that vicinity. So, well, have a great, wonderful weekend. Good luck trading next week.